So, my dear students, good evening again. So, can you hear me, anyone? Please confirm whether am I audible or not while others join.
Yes, audible.
Okay, okay. Thank you very much. So, yeah, basically today we are going to discuss something about your paper, that mean CPT paper in coming examination, right? After next couple of week, right? Not a couple of weeks. They really there will only one week remaining, right? So first of all, I will start the discussion with giving some awareness about the paper structure. Then I know that many of you are will prepare to this exam and will aware about all these paper structure and all. But as usual, then I will explain a little bit about paper structure. Then you can understand the what are the compulsory, that means the compulsory regular questions, what are the questions that we need to guess, or that predict, right? Okay, so that this paper consists of three sections, basically three sections. Right. Yes, then I was a bit muted, right? Don't worry. So because of the technical error. Right now, hope you all can hear, right? And then I will start the lecture with the giving some awareness about paper structure. So in this paper consists of three parts. That is section A. Section A total marks 20 marks, right? 20 marks. Then I also can see that some of the students are still in the waiting room. So management please take necessary action to admit them. Otherwise, then and after discuss all these, the important thing that is student nothing has to resume. So any responsible person. Right, then I will start because otherwise then waiting will be less the time, right? So that means then I have to another commitment as well. For this section A, total marks 20. Under this, there are four questions: question 1, Q2, Q3, and Q4. Q4. So this question, the first question is residence status, the residence rule, and Q2 is something about case law. Q3 and the Q4, the Q4 about, we can guess, like, right? So we cannot say the exact question number, but somehow these topics will cover in first four questions: capital gain, and here SSCL, social security contribution levy, and tourism development levy, share transaction levy, or stamp duty is testable. Testable. The case law also very important for our V-learning students. You know that we have discussed the case law and already upload the particular recorded video to the module. Then you can refer it and ask any questions. So then we can move to section B. The total marks for section B is 30 marks. There are three questions: question 5, 6, 7. So question 5 or 6 or 7 either, right? So I can't say that exactly this like that. So however, these three topics will cover in section number 5, 6, and 7. So what are those things? So value added tax, that means the with SWAT in this time, definitely SWAT, right? And the partnership tax, and then tax administration. Tax administration. So each question will receive the 10 marks. Then my dear student, very important part is the section C. For section C, the total marks allocated for this section C is 50. Very important. Section 8 and section 9. Section 8 and 9. Section 8, company tax computation, and the section 9 is individual tax calculation. So each question will receive the 25 marks each. So here 10 marks. This is the paper structure. This is the paper structure. Are you okay? Any questions? So my dear student, you have to respond. Okay, right. That's okay. Thank you. So this is the content of the paper. So all the questions are compulsory. You have to prepare for all these questions. Now you know that 95 marks you can guess. These two questions definitely will come. Then the VAT partnership, the tax administration definitely come. Capital gain, SSCL, the case law, and the residence rule definitely come. Then you only need to predict, that means only for maximum 2 or 3 marks. Maximum 2 or 3 marks. Right? So with that part, then I will discuss the today paper. The today paper you already received, right, from the management. So hope you all have that paper. So then I will share that. So can you see that? This is the prepared paper. This is the guess kind of the mock paper, right? The prepared by myself. So you can see that same kind of the structure is there. But unfortunately, with the available time, I could not be. I would not be able to discuss all these frictions with today in this session. Then I basically cover section number 998, section number 998, because that is the most important and the highest weightage part in your exam paper, because that is 50 marks out of your paper. That was the section number 9, and section number 8 I will discuss. So when we discuss this kind of the question in your exam, what you need to do is, don't panic. Just you can read the question itself. That means whole question you have to read it. Right? You can take some time and you have to read. Right. Okay, then I was muted, don't worry. Right here, once you get this kind of the question in your question paper, you must read the question, and then you can identify whether that item to be included or excluded or exempted. So by using your theoretical knowledge, what you have gained throughout this 5 or 6 months. So then here what they ask to do this, all the same thing they will ask in your exam as well. Then yeah, need to assess the taxable income, gross income tax payable, balance tax payable, and the exempted income if available, right, for the year of assessment 2023 and 4. That is your year of assessment. So you know that already what is the structure for this kind of the question, because then you already practice many times. So you should write down that the particular name of that individuals. So here, Kalana, Mr. Kalana, we can write down Mr. Kalana. Calculation of tax liability. When 20, 3 and 4. Rupees in 1,000, I will use rupees in 1,000. So then we can start, because then we have already distributed this paper in today morning, if I was not mistaken. Therefore, my dear students, then you should when such kind of the information you receive, then it is better to come with the answer. So here there are four type of basically four sources of income for individual. Among them here, then you can see that there are three type of income applicable in this colonus situation, colonus scenario. So what are those things? Employment income, and the business income. I said that the business income also there, and then other investment income, no other income in this case. So now you can take all together. Then section 52. Qualifying payment and relief. Then what are the qualifying payment and relief available for individual? You know that. So what are the qualifying payment and relief available? So you should know now. Right, we'll see when we discuss that. So then you can get the taxable income. Because the taxable income is the income that you need to calculate for tax purpose. Therefore, then taxable income you can take in this way. So thereafter, you can calculate the gross tax liability. from the gross tax liability, you can deduct the tax credit available. Tax credit in the sense what you and already the tax payment you have already made in a way of the withholding tax, so you know that the kind of the assessment that mean the self assessment as a installment. Right, we'll see that what are the available things. So here then you can calculate the balance tax payable. So we need to do some working on to calculate this the employment income, the business income, and the investment income as separate working. So then I will use as not the note one, note two, and the note three. So simply the first one, note one, employment income. So then we can start the note two calculation. Business income. Then profit before tax. So we have to start with that. Then we can work in on that the note three, investment income. All right. So here we'll start with the question that will not question that information provided in the question itself regarding the employment income. The colonel is the chartered accountant attached to the leading construction company in Sri Lanka as chief accountant, right? Accountant, here the spelling should be changed, right? So he has given the following information for the year of assessment 2023 and 4, hereafter referred as the year, the income from the employment, the gross salary per month. Should we take that as a part of income or not? Yes or no? Yes, definitely we have to take it. Therefore, the per month that is a that kind of the benefit. So here the business income that sorry the employment income you have to take as a gross salary. Sorry, gross salary. The gross salary given. The gross salary is per month rupees in thousand. I will use per month 300 into 12. Then how much the total? 3,600. And the arrears salary. Arrears salary is a kind of that benefit you received as a lump sum. So however you received during the year, even though there is arrears in 2023 and 2 and 3, we received the year of assessment 2023 and 4 because then for this employment income we need to calculate in cash basis. Cash basis, not the actual. Therefore, then whatever the amount you received, if there is a employment income, you have to take that as a part of the employment income for the calculation of the tax purpose in that particular received year of assessment. Therefore, this arrears salary, the 300, you have to take that as an income of this year of assessment 2023 and 4. Clear or not clear? Clear or not clear? Any doubt? Yeah, okay, thank you. So one student asked, sir, could you please show the format for second one? Second one, I mean this one, then I will show it when we are doing that. Don't worry, right? So then you have to familiar with this format and all right now. So okay, then however you have to committed to write in this next couple of weeks, right? So it's a kind of that sad situation about that. If you are already, that means if you are still not familiar with this the structure, no, right? Okay, then Arias sir, we have taken, then the company has provided him a car with fuel. Is this a cash benefit or non-cash? What do you think? Is this a cash or non-cash? Is this a cash or non-cash? That is a non-cash. That is a non-cash. That is a non-cash. Exactly. Therefore, how we can take this benefit of the non-cash? How? If it's a non-cash, now we have to evaluate whether you maintain proper records regarding the personal traveling or not. If you don't record, if you didn't record the particular records, then you have to use the values given by the commissioner general. So that is a vehicle benefits for car per month 20 and the fuel per month 20. Then that is a per month value. Then you have to multiply it by 12 in order to convert the benefit to year of assessment. That total amount should be 480. So if they provide the driver as well, what will be the additional value? If the company provide the driver,
10,000 per month.
10,000. Exactly, 10,000. That 10,000 you have to add to the employment. So what is the next benefit? What is the next benefit? His son's school fee paid by the company. Is that a benefit or not? Is that a benefit or not? Is that a benefit or not? Yes, exactly. Benefit. Not a benefit which directly attributable to the particular employee, but that benefit will take by associate person. Who is the associate person? Yes, exactly. Exactly, Maimuna. You are correct. Right. Right. The associate person is whom? Son is the associate person. Therefore, because that son received the benefit because of Mr. Kalane is an employee of particular organization. That's why. Therefore, his son's school fee 180 you have to take as a part of employment. So the next one, the medical benefit received from the common scheme operated by the company. The common scheme indicate that that benefit will available for all the employees, all the full-time employees, right? All the full-time employees. That means, what do you think regarding that medical benefit? Excluded. Exactly. What is the reason? They have to write down it. You need to exclude them. Why? You need to read. You need to write the reason. Available all full-time workers equal manner. They are not clear. So then simply given the APT deducted by the company with the consent of the Mr. Kalana, then how much? 36. Doesn't matter whether that is consent given or not. Now, no need the consent. If the salary is exceed the 100,000 per month, then employer is responsible to deduct the relevant withholding tax on the payment. Clear or not clear? Right. Then the effect you have to take as an tax credit. So here you can see tax credit. Here not AP, the APT pay, the APIT. APIT. The APT is not AIT, right? Not APT, the AIT. AIT not this is not AIT, this is APIT. Right? So how much the paid APIT? So 36,000 rupees in 1,036. There is a deduction. So that is the end of the discussion of that the employment income. We know that because then we already read the whole section. Therefore, then we know that the no any employment income relating to the other information. However, so then in simply all other information relevant to the calculation of the business income. There are two types of business income. He received a share of profit from a partnership where he also was a partner during the year. 2.3 million. His applicable partnership tax credit available for this person is 108. The tax credit also given. No need to worry about what is the value of the tax credit applicable for this color, because then in the examiner, they have given itself this kind of adjustment not a test in your exam, right? Then I will not hope this kind of that complicated adjustment will test in your exam as well. But if there is such thing, now you know that how we can do that. This 2.3 is a kind of the partnership profit. The partnership profit. So other one is what? The 180 is the tax credit. Tax credit. Because as a partnership, the partnership already paid tax on this 2.3 million. Therefore, that already paid tax, you can take as a credit. Therefore, this 180 is normally tax credit. 180 is you have to deduct as a tax credit called the partnership tax credit. In our physical lecture, then we did one question regarding relating to this one, right? So if you can remember, right, by using a particular partnership account, I calculated and show how to calculate this tax credit as well, right? Right. Then no need to worry about that. The way of the calculate the tax credit, it will not test in your exam, but taxation is not all about that only for your examination purpose, because that this is a highly validated subject for your life journey as well. So then 2.3 million we can take as an that kind of business income. So this note 2, then I will add note 2 the business income later, right? Don't worry, then I will do that adjustment in later. But please keep in, we not adjust this 2.3. So this is another business, the owned by particular individual, right? Right. This 2023 and 4, right? This is the income statement given for 2023 and 4. So regarding the income and the deducted expenses given, right? And the net profit also given as 1.5 1,551,000 rupees in 1,551. This profit already calculated by the particular individual by using the applicable accounting standard and that concepts. However, those standard and the concept also applicable in the tax purpose. But the problem is sometimes those rules and regulation which use in the accounting may be differ for the tax purpose, the depreciation and all, right? That is according to the act, we need to do some amendment. So therefore, then in this case, so we have to check what are the allowable expense, what are the disallowable expense. If there is any disallowable expense, we need to add back. We need to add back, right? So in this case, you can see that a computer purchased in 20 and 21, the cost of 800,000 was there in a business. There is no other asset to claim the capital allowance. That means only capital allowance applicable asset is this computer. Therefore, first of all, we need to remove. That means we need to add, because then when calculating the this 1,551 profit, the depreciation already deducted. Therefore, then we need to add that depreciation. Why? What is the reason? Because that is disallowed. Therefore, the depreciation we have to add that. 200. And then you can calculate the capital allowance. How you can calculate the capital allowance? This is the asset which purchased after 1st April 2018, right? Therefore, the computer applicable 5 years or 20%, right? As per the section 60. So, capital allowance need to calculate on a that is straight line basis, 800 into 20%. That means how much? That is 160. Clear or not clear? $160. Clear or not clear? Anyone having doubt regarding what we have discussed so far? You can raise your voice at the same time. Clear? Okay. You can raise your voice in the same time. Don't worry. Right? Don't be afraid to ask questions. Right? I always prefer to give my response for your questions. Then what is the other information? The colonel entered his part of the residence to a business. There is a kind of the business, not a business, that is investment. Therefore, we can see that we have to check, are there any disallowable expenses already deducted when calculating this profit or not? Right? The purchase, that's normally the business incurred the needed expense. The staff salary, yes, need. The rent, same. Electricity, allowable. Water, allowable. Telephone, allowable. Other expense, nothing given this special, so allowable. But here you can see the 50,000 donation. Is that allowable? No, that is disallowable. Why? Any donation, either approved or not, the donation never can allow as an deduction. Therefore, this is a 50. No any information given regarding that. No any additional information. Right? That means this donation is a kind of that normal donation to anyone, not to a government party, not to a approved charity. If so, they have to give that as a separate adjustment or separate information. Therefore, that 50 you cannot deduct as where? Section 52, qualifying payment and relief. This 50 cannot. Just add. Clear or not clear? Did you get that point? Yes or no? Then there is no any other information relevant to this, the business income. We can finalize the Assessable income, so 151 plus 250 together 100. 1,801,160 you can minus 1,641. So that's a assessable business income. So you can add 2.3 million partnership profit, isn't it? And all together, this should be the total assessable business income. This total assessable business income you need to add it to the here we can see that the information we have already taken here, right? Added to the pace of the calculation. Here you note under the note 2, 3,941. So now we can complete that the investment, sorry, the employment income as well, 3,600 plus 300 plus 480 plus 180. So just 4,560,000. So then investment income. So we can use the balance part for the investment income. The colonel rented his part of the residence to a business. Monthly rent is 6,000. No withholding tax on this case. Why? The reason is the rent income is less than 60,000. Therefore, the rent income, you have to get the gross rent. How much the gross rent? 16 to 12. 720. And you can deduct if there is rate paid. So we'll see that whether they have paid the rates. Yes, rates paid 60. If the rates paid by tenant, then you cannot deduct. But in this case, rates paid by Mr. Kalana, because then we have to assume like that they have nothing given in especially. So no actual repair made, but if there is no actual repair made, we have to assume that the actual repair expense is 0. Then you can compare with the 25% gross rental. The 25% on the gross rental is 180. How we got the 180? 720 into 25%. There is a special what? The qualifying payment. Qualifying payment. This is only applicable for individual. 25% on allowance on allowance on gross rent. Then how much? 720 into 25%. 180. So thereafter, he has a fixed deposit in a bank, and the gross interest received for this one is, then some people think that why no withholding tax on this 60? No withholding tax. What is the reason? Because there is a less than 100,000. Therefore, no withholding tax. So gross interest received for the year is 360. The relevant withholding tax deducted. Even the gross interest given, they have given a hint. The relevant withholding tax deducted. So deducted withholding tax you need to take as a tax credit. So what is the withholding tax rate? So one student asked, so how did the 20% came in the capital allowance. That is simple. So 20%. Then in Ifasa, no? Ifasa, can you hear me? So if you are response, then only I can give the answers. Ifasa, can you hear me? කතා කරන්න පුතා කතා කරන්න. message කරාට බෑ. message කරාම තේරෙන්නේ නැහැ මට. Ifasa, please tell me what is the useful lifetime of the computer, any computer purchased after 1st April 2018? Do you have idea? Do you have idea? That computer was purchased 20 and 21 year. That means after 1st April 2018. So regarding the computer, what is the capital allowance rate? That is, you know, that a kind of what? Absolute value. That has defined in the section 16 in the Inland Revenue Act number 24 of 2070. Even in your accounting, there is no such a rate and the useful lifetime defined in the LKS 16. The Inland Revenue Act number 24 of 2017, they have defined it and explained it. Therefore, that's how we got that, right? There is no other mechanism. You have to keep in mind all those rates, all those rates. Ifasa, are you okay now? Right. So this the gross interest is already we added to the investment income. Then what is the withholding tax rate on that interest? Then some student given the answer, right? So 5%, 5%, yes, 5%. Then already 316 to 5% paid. That means already 18 paid, 18 paid. That is what the withholding tax on interest. Withholding tax on the interest paid. So that's all. So the next one. So not here the name is something different. The Kalana. Kalana made the following expense. During the year, Kalana made some donation to the COVID-19 fund established by the government. There is a government fund. Therefore, that any donation to the government fund you can deduct without any hesitate. Like no limitation. Either cash or goods. Right? Donation to COVID-19 fund. That's a fund established by government. So there is another donation made to the approved charity which provide care to needy people, 100 rupee. So can you deduct that 100 rupee as it is for approved charity? You cannot deduct good donations, but the cash donation you can, but there is a limitation. What is that? The maximum deduction to the cash donated to the approved charity should be the lower value of 75,000 no, that is absolute one. Maximum 75,000 no. Actual cash donation no. 1/3 of the taxable income. Now we cannot calculate the 1/3 of the taxable income, but you can calculate the maximum absolute value, that is 75,000 and 100,000. What is the low one? 75,000. Therefore, never 100,000 allowed to deduct for a donation made to the approved charity in the cash for the individual. Right? That is a limitation. Therefore, we have to wait to finalize whether that is a 75,000 or less than that after calculating the taxable income. Right? So all the information we have considered, right? So now we can complete the discussion right here. There is no other investment income. There are only two. All together, then 1,020. Assessable business income. Taxable income is 9,521,000. So now here, what are the available qualifying payment? There is no such information in your exam. The personal tax relief you have to deduct. They will nothing give. They will not give any hint. The 1.2 million is the applicable personal tax relief for any individual for that year of first month. Now you can take, right, the taxable, temporary taxable income in order to calculate the limit. So how much? 9,521,000 is the taxable income. From that you can deduct 1.2 million and 180 and 100. After deducting that, you know that it will be 8,041,000. Otherwise, the 8,041. 8,041. From that 8,041, the limit should be the what? 1/3. After dividing by 3, it will be 2,680,000. Am I correct? So what is the low one? Is that a 75,000 no? Actual cash donation 100,000 no? 2,680,000. So exactly that is 75,000. Therefore, you can deduct this. So total qualifying payment and relief applicable for this individual is, you know, that 1,555,000. Then you can get the taxable income in order to calculate the gross tax liability. 7,966,000. The rupees in 7,966. Exactly. Some students are giving the answers. So now we need to calculate some working in order to calculate the gross tax liability. When we calculate the gross tax liability for individual, there is no such a flat rate. There is no such a flat rate. Gross tax liability you need to calculate on your taxable income. So then before that we have to check, are there any, so what is the total taxable income in this case, right? 7,966,000. So we have to check, are there any capital gain included in this profit or this income? Are there any capital gain include? Yes or no? No. Isn't it? No capital gain. Are there any gain from liquor, tobacco, betting and gambling? No. Therefore, are there any income from, you know, that terminal benefit? Terminal benefit? No such terminal benefit. No such retirement benefit. Therefore, all taxable income we can consider as and what the balance taxable income. Therefore, that then we need to check how many bucket you need to use in order to calculate this. There are six bucket, right? Therefore, that first bucket is first 500 at 6%, second 500 at you know that 12, third 500 at 18, fourth 500 at 24, and fifth one is at 30%, and the last remain all the balance at 36. Therefore, then you have to check the 500 bucket. In this case, the all the bucket equal to 2.5 million. So this is a value which more than to exceed the 2.5 million. Therefore, the all the bucket will applicable to calculate this gross tax liability. Therefore, the first 500 rupees in 1,000 at 6%. Next 500 at 12%. Next 500 at 18%. Next 500 at 24%. Next 500 at 30%. What is the balance? What is the balance? What is the balance? Is 2.5 million. Total was 7,966,000. So this 5,466,000 should be taxed at 36. What is the value? 1,967,776. I had a mistake. So this should be the total tax liability. Am I correct? In our physical class, we discuss many questions relating to this type of calculation. So there is no any other tax credit tax installment paid is there. No installment paid in this case, ne? No neither. Installment paid deal. Are there any amount given as an installment paid? Student? No. Right. Thank you, my 162. So what is the difference now? 0.76. This is the tax amount you need to pay based on assessment. So what is the due date of the payment of this 2,255,760? What is the due date? What is the due date? You have to pay this tax liability on assessment on or before 30th September 2024. That kind of question can test not in this one, but in between, you know that question number 567 under the tax administration. So that is the end of the discussion of this individual tax computation. Anyone, if you have in doubt, then you can ask now. Ask now. Anyone have in doubt? Okay. So then I normally plan to do that section number 2, not 2, right? Section number 8. Section number 8, the company taxation. So if you have any special request to do another question, then I can think about it. So if you have any suggestion, please let me know now. And because it will not possible to discuss many questions as the given time, because you can understand that having 2 hours, it is not possible to discuss all the question, right? So anyone, any suggestions? Any suggestions? If you have any suggestions, please let me know. Then I will consider it. Okay. Then the some one student asked, let's do a question number 8. Yes. Okay. So then we'll start the question number 8. Right? Question number 8. Now, then I hope you already read the question at your home. Then I will not give the separate time to read the question. Right. Then I will discuss this. Please give me 1 minute. Right? Please give me 1 minute. Right, I'm back. Now we'll do that. Right. Now we'll do that. Can you hear me? Can you confirm that I'm whether I'm audible or not? Anyone? Yes. Okay. Thank you. Right. KGD Private Limited. KGD Private Limited. Calculation of tax liability for the year of assessment 2023 and 4. No employment income for the company. You know that, me. So no need to discuss it again and again. No other income in this case. Therefore, that total assessable income, and you can deduct the section 52 qualifying payment. Only qualifying payment, no relief. Why? For an entity, no relief available for all the entities. You know that person can divide into two category as per the Illinois Act number 24 of 2017, section 195, individual and the entity. Entity can be, you know, that company, partnership, non-government organization, charity, NGO, right? The unit trust and trust. Right. So in this case, then you can get the taxable income. Once you get the taxable income, then you can calculate the gross tax liability. Minus tax credit. Then balance tax payable. Balance tax payable. So in this case, same way, then we have to use, we have to calculate the smartwatch. Not one, two. Right. So these are the some you know that structure, but we can write it here. The profit before tax already you know that how much, because in the question itself they have given for the end at 31st March 2024 is rupees in 1080 million. So I will take the 80,000 rupees in 80,000. So now we have to check when they calculate. They mean the accountant for accounting purpose when they calculate this 80 million profit. There can be some income included which are not considered as an income for a tax purpose. There are some expenses you already deducted when reaching this profit in accounting, which are disallowed for the tax purpose. And there may be some expenses which are specifically only allowed for tax purpose. Those are not expense for accounting purpose. We'll see. So adjustment number one we already considered. Then the adjustment number two, other income included in above profit. That means when calculate this profit, you know that gross profit plus other income. That other income included these type of income. But here when you calculate this the business income, that only can consist of the business income. But you know that in accounting purpose, there is no such classification like the income, business and the investment. But in first two cases, you can see that those are what? Investment income. First one is a rent, other one is what? Fixed deposit. Those sum, both are investment. So here we are going to discuss the business income. Therefore, then we have to remove the both 1.8 million and the 1 million because of why? Those are investment income, rent income, and the interest income as it is the in the income statement, because those are not a investment business income. So then you can see that the profit on the disposal of the machinery, that is a kind of the machinery which used for the business purpose. When you read the section, you can identify the information given under the adjustment number 7. Right? So here, this is a kind of the machinery which used for the business purpose that we call that depreciable asset. If there is any gain from disposal of the depreciable asset, that should be included in the business. But the problem is this 665 you calculated as per the accounting standard, as per the accounting purpose. But for the tax purpose, the accounting disposal profit on the property, plant and equipment relevant to the business income generation, that means the depreciable asset, never can consider as an income. Therefore, the 665 also need to remove, because that is not under the tax calculation, that means the tax rules. Otherwise, that is a business income. We need to calculate that profit again as per the tax purpose. Therefore, disposal gain on machinery. Did you understand? Did you understand that? Yes or no? Yes or no? Right. Then we can do separate working to calculate the disposal gain or loss according to the tax purpose. Here, where are those information given? Adjustment number 7, under the second bullet point, you can see that a machinery purchase 20 and 21 for 2.75 million. That is the cost disposed during the year in the sense 2023, and for at a 2,360,000, that is the selling price. Therefore, then we have to get the consideration received or receivable. So how much? 2,360,000. Then you can deduct tax written down value of that machinery, tax written down value, carrying value for tax purpose. How? The cost minus now cumulative, not depreciation, but what? The capital allowance. So what is the cost? Purchase at the cost of 2,750,000. When they have purchased this asset, when they have 20 and 21, you know that there is a tax rule. Any asset which purchased particular year of assessment, disregarding the date of the purchase, you need to calculate the capital allowance for whole year. Then 1 and 2, then 2 and 3. Now you are in 3 and 4. Again, there is a rule in the taxation, particular the asset which dispose during the year of assessment, you are not eligible to get the capital allowances. That means only you can get the capital allowance for how many years? 3 years. Therefore, the cumulative capital allowance should be straight line basis 270,000. What is the rate? What is the rate? This is a machinery. After 1st April 2018, yes, exactly 20%, or you can divide by 5. That is the useful lifetime, right? Then how many years? 3 years, because to get the cumulative. Then 20750 into 20% into 3, you know that 1,650,000 is the cumulative depreciation. Then 750,000 minus that, you can get the carrying value. For the tax purpose is 1,100,000. So difference between the consideration and this one is 1,600,000, 260. That we call what? This what special name we have to told this accessible charge. Accessible charge. So that is a taxable 1,260,000 accessible charge. There is a gain for tax purpose. Then working, you if you want the further notice, then you can refer the notes. The working. So then we consider that part as right. Here we do all the information in the adjustment number. Adjustment number 3, here the administration and the establishment expenses include the following. So we have to check whether these already deducted expenses are allowable or disallowable. So depreciation, you know that is disallowable. Therefore, the depreciation you have to add back how much? How much the depreciation? The depreciation already deducted 6,320,000. You have to add back. Instead of that, you can calculate what? Capital allowance. The capital allowance is the special expense which allow for the tax purpose. Then you need to calculate the capital allowance as and work in 2. So capital allowance. So here to calculate the capital allowances, you need to check the information given in the adjustment number 7. So these are the assets values available at 31st March 2024. Right, we'll see that. That's all other information we have taken, but the estimate useful lifetime of the computer software is 4. The computer software is, you know, the kind of intangible asset. Intangible asset, you know that LKS 38, you may already discuss that under the accounting. Right? Some intangible having, you know, that indefinite useful life, but some some intangible asset having a definite useful lifetime, you know that. So here the first one is investment property. Capital gain, investment property. What do you think? Investment property is a kind of the asset which used to generate the rent or something. That is not a depreciable. So therefore, the capital allowance only you can claim for depreciable asset. Therefore, not a depreciable asset. Exactly. Not a depreciable asset. Not a depreciable asset. So the second one, the build into 20 and 21. How much the cost? Acquired year 20 and 21. Acquired 20 and 21. 8,200,000. The cost. So how much the rate? The rate should be what? Rate should be what? 5%. Exactly. 20 years, so 5%. Then how much? 120, 410. Then the car used by director. What do you think? What do you think? Car used by director. That also not a depreciable asset. It can be depreciable asset for tax accounting purpose. That is not a depreciable asset for tax purpose because of the reason is the personal use. Exactly. Personal use. If any vehicle which used for the personal use, that is a domestic. Therefore, it cannot be taken as depreciable. But the transport lorry, that is a vehicle which used for production of the business income. Transport lorry 21 and 2. How much the total cost? 8 million. How many years? You know that 5 years. 5 years mean already that asset is usable condition, because you purchase 20 and 22, then 2 and 3. This is 3 and 4. Right? So already only 3 years. Then 20%. So it should be 1.6 million. Clear or not clear? So this is machinery. Don't think this machinery include the disposal one. No, the information given in this case at the property, plant and equipment held at 31st March 2024. If the accountant did the accounting treatment properly, this machinery is excluding that disposal machinery. If the examiner given the additional information as the disposal machinery also included in the above machinery, then you have to exclude it. But in such case, there is no such information provided. Therefore, this machinery which given excluding the disposal one. Clear or not clear? Clear or not clear? So then the computer, not the computer table. So earlier disposed the computer machinery. Machinery, yes, correct. The computer 20 and 21 purchase 1.25 million into 20%, because still you can get the capital allowances for 5 years. 20 and 1, 1 and 2, 2 and 3, 3 and 4. This is the fourth year. Then how much? 250. The last one, computer software. Regarding the computer software, you know that there is a kind of the asset which purchased during the year of assessment at the cost of 1,950,000. You must keep in mind, if you know the exact useful lifetime of the software intangible asset, you have to use it. Either you can divide by 4 because the 4 is given. Otherwise, you can multiply it by 25%. How you can convert the useful lifetime into percentage? If the useful lifetime is, you know that 100, divide by that useful lifetime, then you can convert it into rate. If you know the rate, how you can convert into the useful lifetime? 100 divided by the rate, then you can convert into the number of years. Simple, you know that mathematical method which use in you know that grade 1 2, right? So in this case, real actual useful lifetime is given as 4 million. So sorry, 4 years. Therefore, 150, 100, 1,950,000 should be divided by 4. Though for 487.5. If they are not given, the examiner not given the exact useful lifetime of the intangible, let's say at that time you have to use as 20 year or 5%. The total should be 4,087.5. Am I correct? Am I correct? Anyone? Anyone? Am I correct this? Is this capital allowance correct? Yes or no? So what is the percentage we should take if the software expected useful lifetime is not given? The percentage should be the 20%, sorry, 20 years or 5%. Anyone? Did you get that, Kuda? Hasni? Yes, the answer is correct. Therefore, then we can go to the balance part. Here, there is a special expense you can deduct. So 4,087.5. So then we can go to the balance discussion, right? So we already considered all these. Adjustment number 7 we completed. So under the adjustment 3, second bullet point, the donation made to the COVID-19 fund 1,420,000. No, that is not allowed. Any donation you cannot deduct from the business income, but that 1,420,000 you can take that as an what? Qualifying payment. Donation to whom? COVID-19, because there is a government approved fund. There is no any restrictions. Hope this correct. Then the foreign traveling expense of the directors to meet the foreign supplier, foreign customer is 1,530,000. On his private tour is 2,150,000. What do you think? What do you think? Foreign traveling. Is that allowed? To meet customer? Yes, that's allowed because that is a business purpose as per section 11. But the personal tour, that is not allowed. Therefore, you have to add back as per the section 11. Same thing. Section 11. That is not relevant to the production of the business income. Right? 2,150,000. Then the provision for the gratuity. The gratuity provision never can allow because any provision for the future expenses you cannot deduct, but the actual payment on the gratuity can. So as per section 10, you have to add back. Then repair expenditure on the rented property. What do you think about that? Repair expenditure on the rented property. What do you think? What do you think? Not allowed. Why? Because the rented property used to generate the rent income. Rent income. Therefore, that 90,000 is not incurred to the production of the business income, but you can keep in mind that 97 used to generate which income? Which income? Investment. You can deduct from the investment income that rent. So under the selling and distribution, the bad debts charge, there are two bad debts, staff loan that is disallowed, but the trade debtor bad debts are allowed. But you have to check whether have they given the additional information, like the company has not taken any additional or any reasonable action to recover those bad debts. No such information given. So then you can deduct. If the examiner given as a separate adjustment like the information like this, to recover the bad debts, the company has not taken any reasonable action, then you are not allowed to deduct that as an deductions. Therefore, that bad debts write off. Bad debts on the trade debtor, that is allowed in this case, but for the staff loan, that is disallowed. Therefore, you need to add back the staff loan one, 380. And the foreign advertisement expense, the advertisement, there is another section, you know that, section 15A. Any advertisement expenses, either in the capital nature or the revenue nature, if that is relevant to the production of the business income, that is allowed. Therefore, in this case, we have to think that as an allowed because no additional information provided. But you know that entertainment expense to any party, any purpose, disallowed. Therefore, that's you have to add back. You have to add back. 750. Then the most important part is the finance expense. Here you have to use the section 12 and section 18 together. So first of all, section 12, you need to evaluate whether, right, whether these finance costs allow for section 12. Section 12 only allow the finance costs which incurred for the production of the business income. So there are two finance costs in this case. The ODI, normally bank OD will not issue by the bank for the particular unit that will not use the company for personal use. That is as per the section 12 allowed. But here you can see that director's housing loan interest paid by the company. Can you deduct that as an section that as an deductible expense under the section 12? Can or can't? Can or can't? You can't. Therefore, interest on director loan, you have to add back how much the total? 710. What about the other overdraft? 1,756,000. Now we have to apply the section 18. How? What is the maximum ceiling of deduction of the finance cost? How we can calculate that? Finance cost allow under section 12 divide by loan outstanding into 4. 4 can absolute value. 4 is absolute value. It will never change. 4 into equity. Equity should be excluding the revaluation risk. So this is the formula. So to apply this formula, you have to check whether information is available or not. Is that available, the information in the section itself? No such information. No such information. Therefore, we cannot apply the section 18 here. But if the examiner provides the information, then definitely you need to add that information, substitute that information to this formula, and you need to calculate the maximum ceiling. If the actual interest finance cost exceed this limit, then my dear students, you need to add back that excess amount which deducted when calculating the given profit. So in this case, simply we need to assume the bank OD, interest on the bank OD is allowed as allowed. So then 6.1, relevant withholding tax on the interest has deducted. That is relevant not to this finance interest. This relevant to the interest income. Interest income. So all the information is given for that investment income. So we need to get the gross interest. So in the other income, if I was not mistaken, as I remember, they have given the gross interest in the adjustment number 1. Here you can see that gross. Yes, 1 million. That 1 million you need to take as a part of investment income. And when calculating that 1 million already deducted the withholding tax, that means this 1 million into 5%, you already paid the withholding tax as 50. That is the withholding tax on interest. What is the meaning of this 108, 1 million, 1.8 million or the 1,800? Maimuna? Relevant to anything? 1 million, 1.8 million? Rent income. Okay, rent I will discuss that. I will discuss that, right? Then 7th adjustment we completed, 6th completed, 7th completed. 8th one, the gratuity paid. I told that if there is such a gratuity paid, you can deduct 1,450. So the gratuity paid you can deduct. Then tax losses, brought forward tax losses. This is section 19. We have to do at the end. We'll do that. Self-assessment, 6 million, 6 million, So that is tax credit. Installment paid. Now we can do the adjustment on the rent. Rent have been given. So what is that rent income? No other information given, just only the rent income. 1.8 million. Rental income. Then gross rental 1.8 million. No rates paid in this case. No repair. Yes, there was repair. Can you remember? There was a repair expense which already deducted under the business income, which not allowed. Then that 97 you can deduct. But there is no, in this case, there is no, that 25% gross rental such things, right? There is no such things. Because these are not individual, these are company. Therefore, that 25% the gross rental on the allowance on the gross rental only applicable for individuals. So all the information have been considered, all the information has been considered. So no other information, additional information, we can calculate this, isn't it? 2,703,000, that's what we call accessible investment income. 2,703,000. Now we can complete the business income. Can you help me getting these information values? Yeah, 1.8 million. So minus side, the answer should be 9,202.5, right? Plus side 867, eh? Is this? Please tell me whether these answers are correct. Yes, one is correct. The plus side is correct. Then minus side, please confirm, Maimuna. Yes, both correct. So the net is 84,864.5. Then here now you can do the adjustment. Puta, what is that? Brought forward, unrecovered tax loss. So you can deduct any 6 years tax loss against the current year income, the 6 years. That means 6 years mean here the growth tax was brought forward from the previous year. Previous year mean 2 and 3. That's including the previous 6 years. Therefore, 6,850,000. 6,850,000 you can deduct from this one. Then you can calculate the assessable income. 78 million is this answer correct? Yes. So here altogether 80 million. So there is only one qualifying payment, 120, 1,420,000. 79,297.5. That is a taxable income. Then now we have to calculate the tax liability. So this simply, it's not like the individual, there is no particular different tax rate. So here we only consider what are there any capital gain included. If so, the 30% we have to tax that capital gain. Are there any gain from the liquor, tobacco, betting and gambling? If there is such income, we have to tax at 40%. There is no such income, so all 79,297 points should be taxed at flat rate 30%. So 23,700. Please check these answers correct. 23,789.25. Yes. So already you paid two tax credit. Balance tax payable is 17,739.25 rupees in thousand. So that is the answer for that. What we can discuss under the question number 8. So any doubt what we have discussed so far regarding that question number 8 and 9? Any doubt? So I can send this information. So these the answers, right? Don't worry. Then I will upload that into your chat. So any questions? What we have discussed so far? As I promise you that I already discussed that two question. Eh? So any doubt? If you have any doubt, you can ask now. So any doubt? Any doubt? So now, we discuss two questions. You know that individual tax computation and the company tax computation. In addition to that, if you want to know something, now you can ask. Otherwise, then I humbly request to give your valuable feedback, right? Then I will show. I will share the feedback. Not I, but management will share the feedback form. So can you share the feedback? Any the responsible person in the management? Can you share the feedback link to chat, Mr. Udaro, Miss Vindhya? Can you hear me at least?
Yes, sir. Yes. We
Can
will
you
share.
please share that? So I already shared some document with you. Can you share that document to our students?
Yes, sir. We'll share.
Okay, now it's better to share now, right? So how somehow then chat, because all the students are not including that WhatsApp group. That's why, right? If possible, please share now. I will try to share by using my tab. Then it is easy for everyone. Eh? So where we can know, we can go to the chat, add file, file from where. Right, please share that still not received. Hello, Vindya. Hello. So anyone in the anyone from the management, India, Udar sir,
Yes, sir. Yes, sir.
still
I'm
not
here.
shared the feedback for me.
So,
Okay, then thank you very much for your participation, and then I will wish you all the very best for your coming exam, my dear students. Right? If you have any concern regarding the taxation till the examination end, you can ask from me. You can contact me via that WhatsApp, email, or um, other sources, right? So then don't be afraid on your exam, because then now you know that you are then totally that ready for your exam, because then when discussed today's structure, you know that how you familiar with these format and all. Right, okay, then thank you very much and good night, because then I have another commitment at sharp at 9 o'clock. That's why, right? So I'm going to um, hurry up, right? So then management will share the feedback form to your WhatsApp group. If you are, that I'm requesting many time to share the chat, but they are still not ready. We'll see how. Right. Okay. Thank you very much and good night.